to it. Anybody who wants a story, I'd be more than happy to email it to you. Just shoot me an email. First of all, the real estate market, as we discussed, some people are losing their homes. Some people are selling it on a short sale. What are some of the tax consequences? Start off with the foreclosure, because I did not know there are tax consequences on a foreclosure.
Sure. So any time that that the value of the home goes down relative to the loan amount, let's say that someone has a loan amount of $500,000,
right?
And there's a foreclosure, and the bank takes over the the home, and let's say that at that point the home is worth $400,000. So therefore, there's a difference between the loan amount and how much the bank is getting back in return for that property. Whether it's a short sale or foreclosure, it's a similar situation.
Right.
So in that case, what's going to happen is that the bank, since they are losing those $100,000, they're actually going to generate a Form 1099,
right,
where they're declaring to the IRS their income.
Like as if you made it, huh?
Yes, and it's really not income that the person made, but it's really a debt cancellation.
Right.
But that debt cancellation for the IRS is considered income. Especially, let's say, if someone took money, refinanced, and took money out, in reality, they may actually have received that income. Right. Because they, when they refinance the home, maybe they bought the home for $300, and then it later increased in value, so they refied it for $500. So they actually did take $100,000 or $150,000 out. So it is income that they actually may have received, potentially.
So basically, what happens, what you're saying is, so on a short sale, folks, and we'll talk about foreclosures a little bit, but on a short sale, if you bought the home for $500,000 and you put no money down, you have $500,000 loan, all of a sudden you're selling a home for $450,000 minus closing costs is about another $35,000, $40,000, so you're down to about $410,000 more or less. So you're going to ask the lender to forgive about $80,000 to $90,000 of that debt, right?
Yes.
So whatever that debt that's being forgiven, the lender will give you a 1099 because they report it to the IRS for several reasons. Number one, it's a write-off for them, and have to show that they've forgiven that debt. But number two, the IRS feels like they need to kick you a few more times when you're down, and they're basically saying, hey, guess what? You borrowed $500,000, but you only paid back $410,000. So that means you had income or you had a profit, when in reality, people who face short sales don't have a profit.
That is correct.
So what are you seeing out there? Are people being stuck or getting stuck with mega tax bills or not?
Well, it's really something that we're starting to see this year. So it's really in the 2007 tax year, January of 2008, that's really when we're going to see the big impact of this. But what's going to happen is that if people don't really take some steps that we're going to talk about in a minute of what steps they can take, then they would actually, in their taxes, they would be showing, $80,000, $90,000, $100,000 of additional income that they didn't really receive, but that they were going to be declaring as income, and they would have to pay taxes on. As I mentioned, there's ways of avoiding it, but if they take no steps and they go with a CPA or a tax preparer that doesn't really know what they're doing, they could get stuck with a huge tax bill. We're talking $20,000, $30,000 in additional taxes that they may be paying because of this income that is being declared as income to them, but then they're not really seeing.
Okay, so they could consequently be affected and could get a bill for $25,000, $30,000 from the IRS, right?
That's correct.
So people say, well, I'm scared. Why would I want to do a short sale? Or what happens if my property gets foreclosed upon? Gosh, I don't have any money. How am I going to pay another $30,000? There is a way for you to avoid legally, once again, ladies and gentlemen, there is a way for you to avoid paying taxes on that. Tell us how.
Yes, so basically what happens is that the IRS says the person that is receiving that 1099 has two ways of avoiding to consider that as income. So those two ways are, one, if the person is bankrupt, or two, if the person is insolvent. Now, bankruptcy, ever since the law changed a couple of years ago, has gone a lot more complicated, and it's a lot more complicated and expensive to prove that you're bankrupt. And and debtor's not going to be forgiven as easy as it was in the past.
Which is probably good, because too many people were claiming bankruptcy, and that's what happens.
That is correct. Yes.
Okay, go ahead.
Now, the second piece, the second time where a debt can be a debt cancellation would not be considered as income is when you're insolvent. So what does being insolvent mean? Being insolvent means that you have more debts or liabilities than you have assets. So a lot of people that are in a short sale situation, they're in that situation in which their debts are higher than their assets. So what does that mean? That, let's say, once again, looking at this example of the home that I owe $500,000. And I'm just getting back, 420, for example. Huh? And we need to add, how much is your car worth? If you have any stocks or any investments, any assets that you would have, we would need to tally all those assets, and then we would need to tally all the liabilities or debts that you would have. So if your debts are higher than your assets, then let's say that they're higher by $50,000, then you can eliminate that debt cancellation income with that insolvency differential that there is.
Okay, interesting stuff. So when you're going through a short sale, Manuel, a lender's not going to allow you to do a short sale unless you can prove you're financially insolvent in the first place. So the same information, or very similar information, is the one that's provided to the IRS. Right now, personally, me, I don't want to talk to somebody like you. Okay? I can go in your office and say, hey, Manuel, can you help me with these forms? What do I need to do? Because, it's kind of like people who want to sell their home themselves. It's not always the best thing. You think you're saving money, but you're not always. And I don't dare mess with doing my own taxes. I don't even know, I barely found out what a 1099 was. My CPA does all that for me. But my point that I'm making is, this is something, in my opinion, that requires the assistance of a professional. And what's interesting about that, folks, is we're not talking about thousands of dollars here. We're talking, I don't know, a couple $100 more or less to get this thing resolved with somebody like yourself at Latino Taxes. And the reason why this is a great investment is because, think about it, you could be, sitting on a $30,000, $40,000 tax bill by the IRS, when you have to sell your home for less than what you paid for. And, if you just spend $100, $200 on meeting with somebody like Manuel, you can actually put this information together, right? So what is it that you ask for when you do an appointment to prove financial insolvency? Are there certain documents that you ask for? What are they?
The documents that we require are any documents related to any assets that you own, as well as any documents related to any debts or liabilities that you would have. So the first thing we're going to require is, the closing documents, related to the home that you owe, as well as any credit card statements, any statements regarding to car loans, any additional, debts or loans that you may have. And separate from that, we also want to tally any goods or assets that you own. So any statements from, investments, from, stocks, any portfolios that you would have. If you, own a car, for that you won't really have a statement, but, you need to come up with an estimate of how much the car is worth, or maybe we can look at the Blue Book value, things like that. So we're going to want to tally your assets and, as I said, tally your liabilities. And then based on that, we can run some scenarios and tell you what your estimated tax bill would be for next year.
Okay. So do you also take into account, like, for example, lenders, before they approve a short sale, they'll take into account, like, what your PG&E bills are, what your, what's in your checking account, what your other debts are, like child care and so forth. Do you do that too for financial insolvency, or is it just basically, in terms of assets versus liabilities?
You're going to look at, if they owe, child support, things like that, those are liabilities also. If they have, any money in their checking account, those are assets also. Okay. But you're not going to look at their expenses like PG&E bills. You're not really looking at what their income is. It's really more, how much they owe versus how much they have.
So it's a little bit different than what you're going to submit to the lender, because when you do a short sale, folks, and you're asking the lender to forgive you a certain amount of dollars of the debt that you owe, the lenders want to see basically that you're pretty much on your last leg. In other words, they want to know that, hey, you don't have $150,000 sitting in the bank somewhere and you're asking them to forgive you a $50,000 debt, because their thought is, well, why should I forgive your, $50,000 debt when you got a couple $100,000 in equity at another property? And it's not that easy, folks. Really, short sales are meant for people who have bought a home and maybe they can't make their payments anymore and they're afraid because they can't sell it because they owe more than what it's worth. There is a way out, and there are options, and there are ways to protect yourself from having a mega tax bill. And also, people seem to think that the lenders are going to go after you for the monies on an owner-occupied property that you bought if it goes into short sale. No, once your property's sold and everything, they're not going to go after anymore. They're going to send a 1099 to the IRS. So I guess the great news about that is that you do have options. If you are in a situation, or you know somebody who's in a situation where they can no longer make their payments and they're stuck and they think, I can't sell my home because it's worth more than what the balance is more than what the property's worth, don't worry. You can still sell your property by way of a short sale. And I would have to say, and I would venture to say, that it would probably be a good idea to get in to meet with somebody like you as you're going through the process of putting your home on the market, and you go into the process and not wait until the last moment, right? Because the way I feel about it is, why not kill two birds with one stone? And I probably shouldn't say that because, we're in a We're in an eco-friendly